Welcome to Momentum Monday. Today is July 17, 2022. Howard, are those real glasses or we just want to look smart?
These are unfortunately 2x magnifiers with like computer blues, whatever. I was wearing like the Walgreens $20 ones, but they're just so bad. Like I just had a pair with a real lens, like with like not a Walgreens lens. How do they look?
Pretty good, pretty good.
Got a haircut?
Yeah.
We look a little bit alike when I got a haircut.
Yeah, pretty close. Yeah.
You seem thrilled.
Twins. And
rip.
yeah, let's talk about the market. Big CPI report last week. Record inflation and accelerating 9.2, something like this. But it seems like the market shook it off. Like it had all the reasons to really sell off on those numbers, because they would mean that the Fed will remain aggressive or even become more aggressive than it already is. But the market didn't sell off, which is bullish. You know, when stocks don't sell off on bad news, that means the sentiment has improved. And we're already starting to see that in select stocks. I mean, it's still really slim pickings when it comes to really stock setting up and acting constructively. And most of them are really in the healthcare space, like especially biotech. As you can see here, the biotech index, like definitely constructive price volume action in the past 3 weeks. You can see the updates that are much bigger volume than the down days, and it's kind of just making higher highs, higher lows above its rising 20-day. So that's constructive. Obviously still below its 200 days, so still in a long-term downtrend, but we're seeing some individual.
Give me let's take a look at the weekly. Oh yeah.
On XBI, sure. Let's take on the weekly. So as I said, longer term is still a mess. Short term, if you're like a swing trader, there's definitely some
correct. Like this is swing trader heaven. I mean, there's nothing for me here.
Positive developments. So some, there's some biotechs that are kind of
talked about this last week.
Acting constructively, setting up this one, Harmony, and we have Halozyme. Just the dips in biotech just keep getting bought, which is positive. And I mean, if you remember back in 2008, 2009, when the indices bottomed in March 9, 2009. But actually, if you look at the biotech ETF, it bottomed in November, so a few months ahead of that. So maybe this year we might see something similar, especially taking into account that it's a midterm election year. The market, it's typically very weak ahead of the midterm elections and then very strong right after them, November and December. So we might see something similar play out with the year-end rally, and then we're already seeing, sectors like biotech already maybe bottomed and starting to move up. I mean, obviously a big factor is that Treasury stopped selling off for now because the market.
They're still just. I mean, they need to. Just still so oversold, but there's not a. Like, think about this. Like, look how oversold we were on this, and just nothing. A 5%, 10% move.
Yeah, a
more
tiny bounce.
Yeah. Like I agree with what you're saying, but as a long-term trend follower, like with the dollar this strong, like there's trouble out there, right? Like maybe the U.S. predated this, but like if you look at like PayPal, which I own some, and I'm about to get stopped out, but like you see PayPal, which I was dabbling in the 70s. But it's just not holding. And then you go look at, so it's down 80%. It's crazy.
No,
but
so
if you
76.
If you look at the ones that I used to follow in Latin America, for example, PAGs, I'm trying to think of the ones that I was following. So they're down like 90%. So it's like the strong US dollar is so Mercado Libre I'm watching, because that gets down to the 200-300s of a dollar crisis here. This is one of the great Latin American internet companies, So, but when you see the US dollar this strong, again, recent history, 25, 30 years, this does not end well because debt's denominated, like global conditions are tightening, forgetting about just the US, what Canada just raised a point. Every debt's denominated in US dollars generally. And so dollars get tighter, and that is not good. Historically, that is just not, that usually ends in some kind of crisis. In the 90s, we had the Asian contagion, and then we had Latin American debt defaults. And throw a war in, throw some famine in, throw elections in. This ILF, you get like, look at that, right? It was starting to look pretty solid like a couple months ago, and then just taking out all those lows.
Yeah, so emerging market definitely. I mean, the silver lining is that the strong US dollar is deflationary. So yes,
like the Bulgarian with silver lining. Like it's usually the opposite. Usually it's the crazy American, and now I gotta rely on you for optimism. So what's the silver lining?
I mean, something optimistic. I mean, obviously, what's good for one part of the world is bad for another. So yes, there's like all the
right. So we got to bail out Latin America.
130 trillion in.
We can't afford bailouts anymore.
US denominated debt. So yeah, it could be a big issue, but it's also deflationary. So at least we don't need to worry about inflation.
Correct. So right now you're in a global contraction. Everybody's hitting the brakes on growth. And so I feel like there's another shoe or two to drop in tech. There's no way, like everybody's talking about the relative strength breakout in the relative strength of Apple, but like that's reaching, stock's 15% below all-time highs. So it's like all it means to me is people are hiding out in Apple. And I don't know. I mean, 3 trillion, it's not like it's not like a growth story. Everybody already owns an iPhone. I think we need a growth area, and crypto's right now in kind of a bear market or a black, kind of winter because of overpromise, underdeliver. So I think why you're seeing Apple so strong is that's all we got, right? It's still a smartphone world. There's nothing new. And, and EVs are interesting, but like Musk is casting all kinds of weird, doubt on the company just with his lunatic behavior and his focus on weird things.
Yeah, the Chinese ones are looking more interesting.
Yeah. So EV is interesting. Where's oil at this week?
I mean, oil continues to pull back. In general,
the question is this a pullback you buy? Like, is this the XLE? Is this the last chance you have?
Yeah, most commodities are pulling back in the past month.
The question is this this is really the one that's interesting to me. Like, I'm not into energy, but like, is this a great, opportunity for a midterm, not a midterm, but a medium term long in energy with this pullback?
Or if you're bullish energy here, you probably have.
Yeah, if you're bullish energy, this is your
bearish tech.
So if you look at like Exxon's pulled back 25%. So if you're bullish energy, now's your chance, I guess, to buy beginning of the year prices in oil. And what you were pulling up wheat before. Wheat's below where Russia invaded.
It's just one example that all commodities.
The breakout there is when Russia invaded Ukraine in February.
Most commodities have really pulled back. It's not just wheat; it's just coffee and cotton and anything you can think of has really pulled back in the past month and a half, 2 months, which will help it with inflation down the road as the commodities are pulling down.
The question is, was this inflation just cured by high prices itself, and the Fed didn't need to raise rates? So the real question here is, did everybody blink? Did the Fed blink? Because like I said, if we have an energy problem, raising rates may slow down speculation in tech, but it sure to hell doesn't help drill, between environmentalists and high rates. I mean, we're not going to solve the energy problem, which is really the problem we've got to solve continually, it seems to be. But
especially in Europe, it's definitely the major issue.
Well, they're starting to open up old coal factories.
What was the Euro 50 So let's pull up Germany for just as a
Yeah, I mean, they
comparison. So
started opening up
definitely
oil.
doesn't
Oh my
look
goodness.
doesn't look
So
pretty.
Germany is getting
New
hammered.
all-time whatever, 52-week lows.
Wow. So Germany, the index is down like back to COVID. So they don't have tech. So they don't have, that shows you without Apple and without like, you know, so this is only going to make them anti-US tech too, because they're the next tech go around they want to own.
Yeah.
Listen, there's so many problems. Again, and so I've been like, sentiment's really negative. Yeah, there's it, like, Jesus. So inflation's raging there. I've been talking to my friends there, between energy and just food. So Italy's a mess. So I think I want to be bullish when everybody's bearish, but I don't think people are bearish enough for the conditions we're in. So it's like a rare moment where I don't want to like buy the dips. I just can't get a rally. Like you're saying, like it was good news that we didn't sell off. I agree. But it is the summer.
But
like
it's not just that. There's some select pockets of strength, Howard, and most of them in healthcare. Obviously, it's nothing that you can get excited about. Okay, no, which was it? UNH, like United Health Group.
Yeah, McKesson. I saw MCK. That was like
MCK. Yeah. So there's some bullish action in just the entire healthcare space, like hospitals and healthcare facilities. And
just don't like seeing these being the leaders because they're ripping off the American. These are all like, this is an industry that hasn't really integrated tech yet, so it's just a huge drain.
Yeah, this one is interesting. I think Vero, because they make female condoms, so I guess it's something that it's a play on the
Is this a SPAC item or something? This could be a SPAC.
I don't think it's a SPAC. It's a play on the abortion issues in the US. So as you can see, it's not a SPAC. I mean, it's been $1 like what, 2 years ago. Here we go. It goes all the way to the 2000s.
Okay.
So it's kind of near
the story stock
all-time high. So it's a story stock, definitely. They don't even have the growth yet. It's just a story stock. Yeah. Also, there's some interesting setups in the like beverage space. Celsius is just a fitness drink, I guess. I mean, personally, I don't consume it, but the stock is acting constructively, kind of trying to build the right side of a new base, and they have the growth. Look at 800%.
What's the market
earnings?
I hear people on StockTwits talking about it, but yeah, I'm not a user of these products. Yeah.
Obviously, the other one, Monster, also kind of setting up. The coconut water, also recent IPO. So this is one of the industries that is showing some strength.
And then you're just cash and swinging?
Yeah, I'm swinging, definitely still a large cash position and just taking some short-term swings because, here and there, I see some good opportunities and I'll just take advantage of them. I would usually sell half intraday. Let's say if I risk $1 and if I'm up at least $1 intraday, I would just take half just to remove my risk, and then I can just swing the rest for the next 2 or 3 days. But definitely my holding period is not really longer than 3 days at this point, short term as of right now. Yeah.
I see the one bright spot for me is I'm finally we're seeing it. If you look at the social, where all the talent was, social network, or I say talent loosely, but if you look at this index, there's going to be so many people freed up and wanting with some capital to start their own companies again. So you're going to see all the employees. I was telling just to the chart report guys on Friday, but you're going to see Snapchat people going to Twitter people going to Snapchat, because they're all going to be repricing their options. Like if you worked at Snap in the last 2 years and were hired, your salary got cut in half. So your only way to level set, you'll get recruited by a competitor in the space and go reset your options by changing jobs. So product people will be flopping back and forth between Tinder and Facebook and Snapchat and Twitter, but a lot of people will leave to start something. And because of a lot of people are leaving, which will create an incredible amount of supply of founders, which should bring down the prices in startups. So it's been 2 years since I've been excited about startups. And so the one thing this market's doing is shaking out, people that in their 30s that want to go start something. What we don't have is an easy way to get new customers, right? So that should bring down prices and level set startups, I hope. But I'm starting to see a lot of interesting ideas. What I struggle with is how you're going to get new users, because you can't just go buy Facebook ads. Those things are priced to perfection. Same with Apple and Google. So really interesting moment.
Isn't crypto supposed to solve that, since it kind of incentivizes the
Well,
users?
but they had token. It was all fucking scammy tokenomics, and that turned out to be fake. As I never bought into that, because giving someone money to use your product as your sole source of customer acquisition could lead to a lot of bad, as we've seen, lead to a lot of bad results. You need people to want to share a product for free. Like what made Robinhood and Facebook and all these Snapchat grow so fast? You weren't paying people to use the product. People were just like excited to use product. Tinder. Crypto's just purely financial so far. And there's only so much, when someone tells you when someone's getting tokens or getting paid like an affiliate to bring you customers, those are generally not the best customers. And so we've seen how that ends. That just ends with massive supply, and that's why crypto is where it is. So no, I'm very negative on that. So crypto's got to reinvent good products, like actually have good products. So again, these are all things that line up on why I'm not thrilled to be buying stock. Big week for earnings. I think Netflix reports this week.
Yeah, Netflix. There's some rumors that they're starting a free service with advertising.
Yeah, well, they're using Microsoft.
They're using Microsoft Bing. Yeah,
they're using Microsoft. So
who else? Tesla, Twitter, and then a bunch of financials. JPM reported missed estimates on Thursday. Basically, the entire financial sector.
We're back at 2018 prices. So if we pull up the XLF, what I worry about with Latin American debt is that you see 2016 prices. If we go to the weekly, I think we start seeing like the low 20s, mid 20s, which takes us back to 2016, 2017 prices. So I hope I'm wrong. Put it that way. I hope I'm wrong. But that's enough for today. We'll catch. I mean, I think people know that there's not that much out there. I mean, people just need to be to continue to take the summer off, I think.
Yeah, most people. Yeah, that's a good advice.
All right. See you next week.
See you next week.